Hi, I'm Emily Smith, Head of Intermediary Sales and Distribution at Harpenden Building Society. Thanks for joining this webinar today on how we manage complexity. So what we're going to talk about today is how we're approaching 2022, why we should be at the forefront of your mind for complex cases, how our manual approach to complex income can help your clients, and residential niche lending and some buy-to-let niche lending at the end. So what's in store for 2022 for Harpenden? So we have increased our sales resource recently. So we now have 2 telephone business development managers fully active on the phone every day, awaiting your calls. Currently we're answering calls on the same day. And if you're having to leave a message, getting back to you the same day, and emails are being responded to within 24 to 48 hours. We've improved our product range significantly over the last couple of months, so our products are now much more simple for you to use. They should be sourcing more competitively, and we've tried to be as competitive as possible. And with that, we've also improved the product fees as well. So a lot of our products previously had percentage fees, which obviously aren't in line with the current market. So we've actually done a sweep of our products and changed the fees on majority of the products now to a set fee, most of which have no upfront fees, a contribution towards valuation fees, and just a completion fee, which is added to the end and also can be added to the loan. We've also made some significant service enhancements across the board. So the upfront inquiry process is a lot more streamlined now. And like I say, we are coming back to you very quickly on your inquiries. Once the application is submitted, a number of improvements have been made to the service. So you should experience a very different service if you've used us previously, with lots more changes to come. So why you should choose us: we take an individual approach to your application. So we individually assess and make a common sense approach to each application. We have the ability to refer on to our underwriting team if needed for pre-approval. So if you do have a particularly complex case and our BDMs feel like it needs to go to our underwriters, it does give you that sort of peace of mind that the application has been considered beforehand. And then when you submit the application, providing it's as you've discussed with us, then everything should be absolutely fine to move forward. Our BDMs are extremely knowledgeable about our criteria and well versed on complex cases, so they absolutely know what they're talking about and are ready and willing to help you. We do take a flexible view when we look at the merits of each case. So we are looking at the overall quality of the case. We don't just focus on the negatives or what's wrong with it. And for us, this year is a really important year for Harpenden. We've got big aspirations for growth and lending volumes. So we absolutely want to say yes. And we are very much here to help with your complex cases that you may be struggling to place elsewhere. We look at many types of complex income, and that's the subject of today's presentation. So we look at lots of different types of income when assessing affordability. To give you a little bit of information now, but I'll go into further detail shortly, we use 100% of bonus, commission and overtime if 2 years can be proved. And we also use income from a variety of different sources, such as rental, pension, investment, trust and maintenance income, and they're all considered at 100%. But I'll go into more detail on that now. So with self-employed, quite a lot of what the business that we do is self-employed and obviously can be quite complex. So approximately 15% of UK workers are self-employed, so they represent a really significant portion of workers out in the UK. And our aim really is to take the complexity out of self-employed. So the way that we look at self-employed applicants, we only need a minimum of 1 year's trading history with a projection for the following year. So someone can have just started a business and have that 1 year's trading history and then be able to provide a projection for the next year, and that would be absolutely fine for us. We lend to all different types of self-employed, so we'd look at limited company, partnership, sole trader. And we can also use the latest year's income for affordability. So whether you've got that newly self-employed person who's got that 1 year's history, obviously we can use that income for affordability, or you may have somebody who's had a business for a number of years and the most recent year is the most profitable, and therefore we could look to take the most recent year's income. Particularly if people have been impacted by COVID, and obviously COVID impacts, we do consider them individually because they are quite complex, and it's all about sort of, you know, the story, what's happened, what's been put in place to move the business forward, and what's the future looking like. But equally, if somebody has had some COVID impacts and perhaps, you know, they've now recovered, and the 2022 income is the best they've had for a couple of years, the fact that we can use that for affordability is really beneficial. Business losses are also considered individually. So again, it's all about the story for us, you know, what's happened, how is it being managed, and what's going to happen going forward. They can be linked to COVID, or it can just be something else that's kind of meant that loss has happened. So, you know, we can look at different types of losses. We do have a maximum loan size of 2 million, so we are able to go up to quite a high loan size. And we don't have any restrictions for self-employed. So some lenders did and have got restrictions for self-employed in regards to how they will lend to them. We don't have that. So we've got the same loan to income, we've got the same loan to value, and same products for self-employed as we do for employed. I mean, if a client is self-employed and they've changed their self-employed status from sole trader to limited company, we do accept that as continuous trading. So a lot of lenders will require a year in that new status of a limited company. For us, we don't need that. You know, as long as they've had that year overall, we can consider the clients. And then in regards to complex income, so the types of incomes that we actually take, and specifically for self-employed, following on from the previous slide, we do take either salary and net profit, or salary and dividends. So whichever is higher, we're happy to take. Some people, you know, tend to take more out of the business. Some people tend to leave money in the business. So there's the flexibility to look at all different types of self-employed income. If it's a sole trader, obviously we would be looking at net profit, and if it's a partnership, we'd be looking at share of net profit. From an employed perspective, for complex income, we do obviously take standard PAYE income, but we are able to take additional income such as allowances, for example, shift, housing, or London waiting, but also additional income such as bonus, commission, and overtime. And as I mentioned on a couple of slides before, we can take that up to 100%. Providing they can prove 2 years, and then if they can't prove 2 years, they might only have 1 year's bonus history, we can still take 50%. So we can always take some element of bonus, providing they've got that minimum of 1 year, but we can take up to 100% if they've got the 2 years. Obviously for the allowances such as, you know, shift and housing, that's 100% as standard. And then we do take a variety of other income, so we're happy to look at maintenance income. It can be court ordered or non-court ordered. We can also take pension income. They don't actually have to be drawing from the pension yet, so if they've got a pension pot, then we can take the income from that even if it's not being drawn. Investment income, so we do have a lot of customers who have significant investment income, and providing it's, you know, liquid investments, we're able to take that for affordability. And then finally, trust income as well, we're able to take that for affordability. The society, because of how small we are, is quite lucky that we don't naturally have a loan to income cap. We don't have to have one. However, we can consider, you know, our risk appetite states that we can consider up to 6 times income. So it is something that, you know, we can be very flexible on from a loan to income perspective, providing the affordability also meets. But obviously 6 times is quite a lot more flexible than some lenders. Contractors, so can't forget contractors. Short-term contracts are considered. We do need a minimum of 1 year's history or experience in the profession. IT contractors, again, you'd be looking for that 1 year's history, 3 months remaining on the current contract, and the way we assess contract income is daily rate times 5 times 46 weeks. These are all assuming that they are employed, so their tax is being deducted at source. If they have a limited company that they contract through, we'll treat them as self-employed. CIS contractors are also considered, and we can consider breaks in contracts if that's happened throughout the person's contract history. So that gives you a bit of a summary of how we deal with complex income and self-employed. We can also help with a variety of other different areas. So in particular on the residential side, we can offer interest only up to 75% loan to value. We do consider a range of repayment vehicles. We can take earned income up to age 75, which is more flexible than some lenders. And we don't have a maximum age, so we're very much in the later life lending space. We can look at guarantors and joint borrower sole proprietor, and we can have up to 4 applicants within that, and we use all of the incomes. So potentially we could, lend a significant amount of affordability. That doesn't have to be linked to joint borrower sole proprietor or guarantor. You can just genuinely have some applicants who want to be on the mortgage together but also on the deeds of the property. So across the board we can consider up to 4 applicants and use all the incomes. We also do consider quite unusual property types, and that's linked to self-build, which we also do. So we do look at modern methods of construction, etc. But we also look at different types of property types, so flats above commercial premises, up to 3 properties on 1 title, semi-commercial properties, and live-work units. So we are quite flexible when it comes to the types of properties. We don't have a minimum property ownership, and as I mentioned, we do go up to 2 million, and that's across the board on buy-to-let and residential, so we do consider large loans, and we do have options for second homes and dependent relative homes. And then on our buy-to-let side, some areas that we can potentially help you with that are a little bit more complex. So top slicing, we're able to consider top slicing if the rental income doesn't meet. We don't have a maximum age on buy-to-let either, and we can also consider joint borrower sole proprietor on buy-to-let. Again, we'll consider unusual property types, and that tends to happen with buy-to-lets, particularly flats above commercial premises. And holiday lets is a really big area for Harpenden. We're very flexible when it comes to holiday lets. We'll allow a 90-day personal usage, and we also consider Airbnb. So holiday lets, we do have a very competitive product as well. And again, large loans falls in with buy-to-let, so we can consider up to £2 million. We do consider first-time buyer and non-owner occupier buy-to-lets. And then quite unusually, we do consider self-build for buy-to-let or development if they wanted to sell it on. So that's something that we can help with. We again don't have a minimum property ownership for buy-to-lets, and then we do consider regulated buy-to-lets and let-to-buys. Thank you for listening today. Hopefully that gives you a bit of a summary of what Harpenden can do and how we can help with your complex clients, particularly on the self-employed and complex income side. If you do want to get in touch with us, you can visit the Paradigm Lender page for Harpenden. The details of our BDMs are on there. They're also on our website. You can either email us or call us, and we'll happily discuss your inquiry. Thank you.